it's just a table of contents to show you what we're going to cover. It's not, it's not a lot, guys. Okay. But we will be going through, the RPA. Okay. So if you guys can all see that, okay. So few things. We're going to be highlighting key contingency dates. Okay. I'm going to go through this fast because I'm going to pop quiz you guys. Required inspections, critical dates, and then there are some special considerations, not requirements, considerations with FHA loans, condominiums, and addendums. All right. So that was that. A few weeks ago, we talked about, as a lender here at Giving Tree, there are a few costs that our borrowers, once you have your consultation, there are a few costs that you should be, making aware to your clients. Can anyone tell me what those were and what those are, as a little quick pop quiz?
Credit check, appraisal, written verification of employment, and if there's HOA certs.
Very good, on. Very good. So, right. The two that are going to be required up front or once you're in escrow is your credit report, right? That we have, that's a mandatory fee, right? That's the only way we can get an application going. Once you're in escrow, and it is regardless of what kind of property is, let me put it this way. Yeah, I would say 9 out of 10 will require an appraisal. Okay. Believe it or not, there are that 10%, be it a refinance or a purchase, it may actually qualify for a PIW. Even on purchases, guys, I've had that happen before, and it's a great thing. But if you get a PIW, great. Obviously, there's no payment, but I'm sure you guys don't want to fork out $600, $700 per appraisal. So once the initial disclosures get signed, the borrower will need to pay for the appraisal. These are things that you should not be not relaying to your customer. And the other two, right, as On said, is if it's a condo, there will be that condo cert fee. It can range anywhere from $250, $300. I've seen even high as like $500. And then the fourth one could be, again, if you're using variable income, there may be a WVOE fee, right? So now let's just say you got your, congratulations, everyone's in escrow. Obviously, you as a loan officer, you're waiting for the copy of the RPA. You're able to do a few things, right? You're able to lock the loan. That's the first day, technically speaking. You can convey the message to the client, to your borrower. You are now able to lock the loan, okay? Now, just by a quick raise of hands, let's be honest here. How many of you actually go through the RPA? Yeah, on, okay? We got one person. Alex is smiling right now. I appreciate your honesty. Paul raised his hand, I think. Yeah, so if you're not, no disrespect here, shame on you, okay? You should be going through the RPA. You should get yourself familiar with the RPA. It is not only the job of our processing team, okay, to go through this. You ought to know this, okay? Common questions going to come up is what? What is the common questions that come up when it comes to the RPA? You're having a casual conversation with your borrower or the agent, and what is a common question that can be referred to the RPA that you'll need to know? Anyone?
Contingencies.
Yeah, contingencies. Right? Why is that so important?
It lets us know what our deadlines are.
Yep. And why is it so important? Why are these deadlines important? Right? Because it's subject to the borrower's EMD, right? The EMD. So you have to know these things. So I'm going to go ahead and share a copy of the RPA, and we're going to kind of go through this together. Whether you're considering yourself an expert in RPAs or not, it's a good practice for us to go through together. So bear with us. Hope you pick up a few things or a reminder. Okay, so I'm going to zoom in on this RPA. I have a few to share, but we're going to go through this one here. All right, so naturally, you're going to have the date prepared. Keep note of this, the name, the address, okay, the zip code, obviously. This part is important, I would say, just because the spelling of the name, you want it to match the loan application, right? Because title is gonna and escrow is gonna prepare CPLs. I don't even know what else, but prelims and on and so forth. The vesting, right? The vesting, and they're gonna reference this RPA. So, and this RPA the name has to match our loan application, right? So that's important. You obviously have your agent's information, the buyers and the sellers. Honestly, I think that's important. Let me scroll down actually to their sign page. I think that's important because this is where you can. Sorry, this is a much bigger screen. So there it is. Now that's the buyers. Sorry, sellers. Here it is. So this page here contains the agent's information. Many a times it may not be accurate, but it's all there. Why am I calling this page out? Because this is where the listing agent's information is. Yes, you can obviously Google it and look up on Redfin or Zillow, but it's also right there. And it's something that you should save the information. Why? Because you should be calling on this listing agent in the future, right? Asking for business. So once the escrow closes, the agent's information is all there. You should be reaching out to them saying, hey, think it was great working with you. Obviously I wanted to keep your information just to let you know that I'm here of service for you as well. Giving Trade, this is what we offer, and you're really selling yourself at that point, right? So this page here, please note it. It's important. It's page 17 of 17. It's the last page actually of the actual RPA agreement. Okay, but going back, so I showed you a little quick index or a table what we're going to be going through today. Who here knows how many and exactly what the 3 contingencies are in a typical residential escrow transaction?
Inspection, appraisal, loan.
Very good. Thank you, C. Keep it coming, C. It's appraisal, home inspection, and loan contingency. Okay. And you will find that really on the first page. Let's go through this real quick though. So a few things to note, right? The purchase price, close of escrow is always going to be very important. Okay. Who here knows when the date starts clicking, when you technically start the clock on the 30 days? Who knows that question?
When the last counter offer is executed.
Yes.
Or both parties execute.
Yes, both parties execute. Anyone want to know, is there even a more a definite response to that?
It's not when the EMD is received, right?
No, it's not.
It's when the buyer signs.
Is it when the buyer signs?
Yeah. When you do counters, once the buyer's the last to sign, once the buyer signs, the clock ticks. That's what I've been told.
Yeah. Okay. So I've been studying for my broker's test.
Is it when you open escrow?
No, it's not. Line 2, what On and kind of Peter said, to when the buyer signs, in the actual California guideline or real estate guidelines, it's when the buyer accepts and signs. Correct. So from the counter offer, so right, the seller's going to counter offer, and usually there's going to be a counter offer, which we'll go through. When the seller sends the counter offer, the date that the borrower receives it and acknowledges it. It's not even a signature, but it's when they receive it and acknowledge that they received it. That's when the clock starts to tick. Acknowledgement actually doesn't always have to be by signature, but as a standard of practice, yes, the deliverance and acceptance is defined by the signature. Okay, so we're going to take a look at that down the road in a little bit. But right, you have your earnest deposit money, your loan amount. Here is really important, the occupancy. Okay, I've had this come up as an issue before because someone's buying it as intending to buy it as a investment, but they keep it as a primary. Underwriter could call that out. So just be wary of that. Okay. and if there is clarification that's needed,